Hello, and welcome to the next of our series of information videos intended to help treasurers and members of the Kirk session to feel more able to understand accounts and the associated jargon used by accountants. My name is Jenny Simpson, and I'm the Head of Finance and General Treasurer at the Church of Scotland. In today's session, I'm going to cover the basic principles of receipts and payments accounts. I'll cover the main things they're required to contain, and we'll then have a look at the format in a little more detail. And finally, I'll signpost you to some templates which you can use if you need to prepare a set of accounts in this format. So, the basic principle of receipts and payments accounts is that they record the money you've received and the money you've paid out in the year. That includes money you've received and paid out as cash, and money that's come in and gone out of any bank accounts you have. The accounts also show your opening cash and bank balances and your closing cash and bank balances, and that's really the trickiest bit of preparing these accounts, because when you take your opening cash and bank balances, add on your receipts in the year, and take away your payments, you must be left with your closing cash and bank balances. And if you're not, then something's wrong and you haven't picked all the numbers up correctly. You'll also have to include a statement of balances, which is basically any assets and liabilities of the congregation, and I'll cover that in more detail shortly. Moving on now to have a look at the contents of a set of receipts and payments accounts, and you can see here that there are 6 main areas to cover. I'm going to run over each of these in a little more detail, with the exception of the independent examiner's report, because the wording of the report is down to the examiner, and I would expect them to provide the wording to you at the end of the examination process. Firstly, let's have a look at the reference and administrative details that you're required to disclose in the accounts. And you can see from the details shown on the slide that it's really the facts and governance details about the congregation. The name of the congregation will be that shown on OSCA's website, and if you're known by any other name or use any other name on a day-to-day basis, you would also disclose that. The list of trustees can cause issues. It needs to show anyone who's been a trustee at any point from the first day of the period covered by the accounts, right up to the day the accounts are approved and signed by the Kirk session, and not just up to the end of the accounting period. If anyone has been appointed or resigned, you should also show the relevant date to make it clear that they weren't a trustee throughout the period. The list of office bearers should cover the name of the minister, the session clerk and the treasurer as a minimum, but you can also include others if you think it's useful to someone reading the accounts. And finally on this, just a reminder that in the past, OSCA have redacted the names of trustees, office bearers and even the independent examiner when they publish accounts on their website. But with the new charity legislation, that will be changing and they won't have to redact the information. It'll be available to anyone looking at your congregation on OSCA's website. Next, we'll look at the trustees report, and you can see from the slide that there are 4 main areas it should cover. What OSCA are really looking for is you to tell your congregation's story so that anyone reading the accounts can understand how you are set up, governed and managed. They want to know what your objectives are and what activities you undertake in pursuit of those objectives. They want to see what you've achieved during the year and how you've assessed your own performance against your objectives. And they want you to provide narrative on your finances to explain the congregation's financial position. The financial review doesn't need to be hugely technical, and in fact it's better if it's not, and it's simple for anyone to understand, but it should tie back to the figures included in the numbers bit of the accounts. Finally, the trustees report is signed and dated by one of the trustees, usually the session clerk, on behalf of the whole Kirk session, and the date should be the same as the one on the statement of balances. I'm moving on now to look at the numbers bit of the accounts. And what I've done here is copy the detail from our Church of Scotland template accounts, which you can access from our website. I've had to split the detail up over a number of slides so that it's big enough for you to see on screen, but obviously in real life it's all on the one page. This is the top part of the section on receipts, and you'll see that across the top you have to split your income according to whether it's unrestricted, restricted, or from an endowment. There's an information video specifically covering fund accounting and the type of funds the charity can hold, so I'm not going to cover that in detail here. I'd encourage you to watch the fund accounting video though. But basically, restricted income is income that you can only spend on one part of your activities or perhaps in a specific geographical location because of a condition stipulated by the person giving you the money. An example would be a grant you get for use in youth work. You can only use it for youth work and you need to keep track of how the funds are used. An endowment fund is a special type of restricted fund, and again I cover them in much more detail in the fund accounting video. Unrestricted income can be used for any of your activities subject to the overarching requirement for the trustees to use their funds in pursuit of their charitable objects. Going back to our receipts and payment account, you can see we then give it a total for the year, which is the sum of the three funds columns, and we also give a total for last year, which should agree to last year's accounts. Down the side of the statement, we have the various types of income so that a reader can understand where the congregation's income is coming from. Moving on to the second part of the receipts and payment account, and you'll see that we're still within the section on income, reflecting the huge variety of sources of income you might have. We have headings to record the proceeds from the sale of investments and from the sale of assets, which is one of the main differences between receipts and payments accounts and accounts prepared under the accruals basis, which would only record the profit or loss on disposal of assets and investments. We also have a line for amounts received from the General Trustees, which would include any amounts you claim from them from a revenue balance in the Consolidated Fabric Fund, as well as any grants you receive from them for capital costs. There's also a line to bring in any funds you receive on a union with another congregation. We held a webinar specifically on finance in unions last year, and we covered how the union is shown in the accounts. So if you'd like a link to the recording of that webinar, please do get in touch. There's also a useful Q&A document on the subject on our website. Finally, at the bottom, you can see we total up the receipts for the year across the various types of funds and the overall total receipts. The final bit of the receipts and payments account is the bit on the payments or expenditure, and you can see that this is split according to what the money was spent on, whether it was to generate funds, such as the cost of holding a fundraising event, or whether it was spent on your charitable activities, or whether it was a cost of governance. Governance costs are the costs of you being a charity, so it would include any statutory or regulatory compliance costs, such as the fee charged by the independent examiner. By contrast, costs associated with safeguarding would be included within charitable activities because they're incurred because of what you do and who you work with, rather than simply because you're a charity. At the foot of the statement, we total up the payments and calculate the surplus or deficit before transfers. We then record any transfers between the different types of funds. An example of this would be where you have some restricted income left at the end of a project and the funder kindly allows you to keep it. You reclassify that money from restricted to unrestricted by showing it as a minus in the restricted column and a plus in the unrestricted column. And the total for the transfers column must always come back to zero. The final line is the overall surplus or deficit for the year. The next part of our accounts is the statement of balances, and again I've split this over two slides so that you can see it. The first bit is the bit that reconciles the opening cash and bank balances to the closing cash and bank balances, and it picks up the surplus or deficit from the previous statement, the receipts and payments account itself. This is the only place in these accounts where things need to square. As long as opening plus receipts minus payments equals closing, then everything's okay. The statement of balances is also split over the type of funds, as you can see at the top of the slide, so you do need to keep a careful track of unspent balances on restricted and endowment funds. Finally, at the bottom of this slide is the value of any investments you hold at the year-end date. If your investments are held within the Investors Trust, then you can simply pick these figures up from the statements that we send out to treasurers in late January. The last part of the statement of balances records any assets and liabilities of the congregation. It simply lists them and is not required to square in the way that a balance sheet prepared under the accruals accounting concept would. And this is an appropriate point to remind you that we have an information video on accruals accounting if you'd like to understand that a little bit better. The example given here as an asset is gift aid receivable. That is, gift aid you're able to claim on donations received during the year, but for which you either haven't submitted the claim to HMRC yet, or HMRC haven't paid you yet. Assets shown here would also include the cost or value of any tangible fixed assets owned by the congregation, but for this purpose you'd set quite a high bar, such as a minibus or perhaps valuable audio-visual equipment. You certainly wouldn't include the kettle and other low-value items. Assets might also include other amounts owed to the congregation. Liabilities are amounts that the congregation owes but hasn't yet paid, and you can see that the example here is repairs not billed. So perhaps where the plumber fixed a leak on the 30th of December but didn't send you her bill until January. The next section of our accounts is the notes, and you're required to include various disclosures in the notes, some of which I've covered here. Some of these stem from the Charity Accounts Scotland regulations, and some of them stem from our own congregational finance regulations. I'll cover related parties in a moment, but apart from those, the most problematic disclosure is likely to be the detail regarding the funds, because you need to have a solid grip on the various restricted and endowment funds you hold and what they can be used for. The good thing is that you can probably pick a lot of the detail up from the previous year's accounts. It's worth noting that for trustees' remuneration and expenses and for transactions with related parties, you have to disclose anything that's happened in the year, but you also have to confirm that nothing has happened if that's the case. That's quite unusual in accounts. Usually, if something doesn't apply, you just ignore it. But OSCA see these areas as so important for charities that they require the negative confirmations to be included if appropriate. Turning to the requirement to disclose transactions with related parties, I've included a summary on the next two slides of who a congregation's related parties are. Not too onerous or surprising on the first slide. You'd expect that all of the trustees would be included. But when you get to the second slide, you see how wide it starts to get, because it's all of these people connected to each member of the Kirk session who are also included within the definition of a related party. So you can see that each congregation potentially has hundreds of related parties. And on the third slide, you can see how wide the definition of a close family member is. So it's important that all members of the Kirk session are aware of the requirement to disclose any relevant transactions, and also that they're asked to confirm anything that has happened and requires disclosure, or to confirm that there are no such transactions to disclose. The final part of our receipts and payments accounts is the appendix showing any balances held by the general trustees for the benefit of the congregation. But the good news here is that the General Trustees Finance team send you the required information, and all you need to do is copy the details across. So, lastly for this session, I promised I'd signpost you to some templates that you can use to help you prepare a set of accounts under the receipts and payments basis. And you can see here the relevant web addresses for both our own Church of Scotland template and also a more general template provided by Oscar, the charity regulator. Thank you for listening today. I hope you found it useful, and if you have any questions, please don't hesitate to get in touch with Presbytery or with the Stewardship and Finance team at 121.